Hey, what's up, y'all? Welcome back to Roth IRA. Today, I'm going to give you guys a quick little weekly update on the Roth IRA. It's been doing really bad recently, just because the market's been bad. Well, it's not been doing really bad. It's holding up okay. But anyway, I'm going to take you into the phone, share the portfolio with you, what I have, and how it's been performing recently. And I'll take you into the spreadsheet and show you the underlying performance over the long term. So let's do that. Let me record the screen. 3, 2, 1. Bam. Let's open up Charles Schwab. I'll refresh it for you so you can see the market is closed. This is Friday afternoon here in China at 5 o'clock. So 5 o'clock in the afternoon in China. So there's no market activity yet, but the market will be opening soon. So you can see the balance right now, 57,352. So it was down yesterday. This day change, this is yesterday's. It was down 1.52%. And I have 25,213 in cash. Let's go view all the positions here. So at the top are my equities, RGTI and SoundHound, or SOUN, Sound, Rigetti and SoundHound, quantum computing and AI stock. This was doing really good. It was up like 300% at one point. But anyway, I took my initial investment out. So this is just house money that's here on Rigetti. And the same thing on SoundHound. I took my initial investment out. And so this is just house money now. If this drops down towards my cost average, I will buy more. So I might sell some options on this, sell some put options, and get a little bit of income and maybe get filled and hold for the next round of wave up. Here's my ETFs. I have WPay, which is Round Hill's weekly universe ETF. It's just all the Round Hill weekly Round Hill leveraged weekly pay ETFs. They're all in here together. And my battery's about to die. The next one I have is SCHG. This is Schwab's U.S. large cap growth. It's basically the same thing as like a VUG from Vanguard, similar concept. And SHB, which is Schwab's U.S. broad market ETF. It's basically like same like a Vanguard VTI. Similar thing, exact same thing. It's just Schwab's version of it. Then it has SWVXX. 12,597 in cash there. It's a 4% annual yield. Pays each and every single month. And then I have another 12,615 in cash, just sitting there on the sideline to purchase stuff. I might put some more of this into SWVXX for now, though. So that's what I have in the portfolio. Now, I did just get paid on a couple of days ago. When was that? On the 21st, I got paid. Why does it say journal? I got paid on the 19th from $92.89. That's what I got paid from WPay on the 19th, which was a couple of days ago. And yeah, so that's what's going on there. So now that you know what I have, let's take a look at the underlying performance, how it's actually performing over the long haul. And let me do this. I'll do it on my computer. It's just easier to do there. 3, 2, 1, bam. All right, let me make this bigger so you guys can see it. Okay, so there's my Rigetti, WPay, SCHB, SCHG, and SoundHound. They're all here. The same number of shares I showed you just now. And there's my cost averages and my share price. Let's go look at the performance. So right now you can see Rigetti, it's only at 90%. It was almost 300. That's crazy. It shows you these things come in waves. But yeah, I'm still up 90%, but my initial investment's out. Like I said, WPay is getting hammered. This was supposed to be my income play, so I have income to buy stocks once I maxed out my contribution limit, which I already have. And this is supposed to provide income so I can keep buying even though I've maxed out. But yeah, it's not doing very well. And if this continues to fall too much, I might have to sell this. But I don't know. I think it could do well in the long term. Maybe I should just hold on and at least get my money back, or just hold on for a long time and just get the income out of it and milk the income to keep buying other stuff. SCHB, this was up 10%. Now it's only 4.7% because the market slid back a lot. I did add a few shares here and there. Then we have SCHG. You can see this one is 5.35%. This was also over 10%. It had recently slid down with the recent market downturn. And then SoundHound, 21%. This was over 100, and that's down now as well. But so everything, I mean, it's holding up okay. No big deal. My total return is 6.44%, cumulative total return, I guess. Market return is pretty much flat, which it was up until this WPay fiasco happened. So anyway, that's how it's performing right there. If you look at my dividend log really quick, so far $352, and I still have another payment coming from next week. So this should get me close to $500 this month in income that I could use to buy more stuff. But right now I'm just going to drip this and average it down. And yeah, so that's the plan for now. Really moving forward, what I plan on doing, I'm probably just going to put more of my cash into SWVXX and then harvest this income from WPay. I'll be dripping for now, averaging it down until it at least gets break even or a positive total return. And I'll see what the market's looking like at that point in time. If the volatility continues, the extreme volatility, I might go ahead and just sell out of WPay, but I'll wait until I get positive on it, on total return. But I may do that and just avoid income altogether in this portfolio, because it's just a retirement account anyway. I don't really have to have income, but I just thought I wanted some income so that way I can buy more stuff once I reach my max contribution limit, which I do every year. But I don't know, I just didn't see a lot of buying opportunities that really attracted me, so I just kept holding cash. And also I like having the extra cash there, because in a Roth IRA you can actually take out the cash that you've deposited penalty free, because you've already paid tax on that money, so it doesn't matter. You just can't take out the money you've gained. And I want to have that cash there that I might be able to use, because I might use that cash towards buying something soon, and well, within the next year, maybe, possibly, but we'll see. It's just a thought for now. But that's what's going on in the Roth IRA. Like to hear your comments down below, and thanks for watching, and I'll see you guys next time.